Hi guys, this is Ali Ilyas, founder of Per Tax People, and welcome to today's video. Today I'll be sharing 7 tips on how to invest in real estate and save money on taxes. Now, before we start, why you should listen to me? The reason why you should listen to me is because I am a registered tax agent, CPA qualified professional, and I've been working in tax and accounting industry for the past 15 years. I've also helped many real estate investors on how to save money on taxes, and I've shared valuable information with multiple scenarios. So, today we'll be sharing 7 tips on how to invest in real estate and save money on taxes. Um, Now, before we start again, there is the good news that currently the property market is, as you can see here, the market is down, the interest rates are down, and this is the best time to buy property. Right, so if you look at the property clock, currently the property clock is sitting around 7 o'clock. Right, so 12 o'clock is the peak of the property clock, and from 12 to 6 it's a declining phase, and then from 6 to 12 is the upward phase. So currently we are sitting around 7 o'clock, and if you buy now, there's potential chances of increasing, getting the maximum return on your investment. Right. So let's go with the 7 tips on how to maximize return. Tip number one is the mindset. So before you get into the real estate investment, the stats do show that around 71% of the Australians only own one property, and around 1% of the Australians own more than 6 properties. So, the reason why most of the people do not own multiple properties or not real estate investors is because they do not have the right mindset. So you need to get your psychology right. It is not a 1 day game, it is not 12 months game, it is a very long term game, and you need to have a very positive mindset. So it is not similar to losing weight, going to gym, where you need to work hard for 6 to 12 months, and you need to put in continuous effort, and you need to learn, and you need to exercise. So if you have the right mindset, you will be able to make it. um, I mean, without mindset, and a lot of people do have this fears of accumulating a lot of debt. A lot of people have fear of losing jobs. So yes, in the investor world, this is how things work. There will be times when you will be going through good times. There will be times when it will be tough times. But if you have a positive mindset, and you know how to manage your risk, you will be able to make it. Tip number two: invest in yourself. Over the past 10 to 15 years, I've invested thousands of dollars in myself. The reason is because it helps you know what to do and what not to do, and you can learn from other people's experiences. So feel free to attend as many seminars as possible, attend the training courses, because the best investment is actually investing in yourself. It's this The same thing works in real estate. The more education, the more financial literacy you have, the more knowledgeable you are, the more likely you're gonna make the right decisions. So the best investment again is to invest in yourself. Try to learn as much as possible. Tip number three: Tip number three is finding the right team, right? So when you are investing in property, you need to make sure you've got the right accountant, right? Mortgage broker, real estate agent, and financial planner, and there are so many other people associated. So if you have the right team with you, you will be able to make it. Accountant is the most closest. Accountants and mortgage brokers will be the most closest to you when it comes to real estate investing. So you need to make sure your accountant knows what they're talking about and actually have invested their own money in real estate. The same goes with the mortgage broker. I mean, most of the mortgage brokers or accountants are unqualified or inexperienced. They've not learned or handled many multiple properties. So if you want to when you hire an accountant or mortgage broker, make sure they've invested their own money in real estate. Right. So four. Tip number four is develop the right plan and strategy. So when it comes to real estate, there is multiple strategies you can adopt to create money, to create wealth. For example, you can go for becoming a developer, or you can go with subdivision strategy, or you can go for flipping strategy. Um, so there's multiple strategies you can go for, and in these strategies, again, you may have a strategy to improve your cash flow. You may want to buy a property which at the end of the day costs you nothing, but then again, with the cash flows, there's potential chances you may be losing capital growth. On the other side, some people only focus on capital growth, they do ignore the cash flow. And with the capital growth, in the 5 to 10 years, the property automatically becomes positively cash flow. So you need to sit down and work out what is the best strategy you will be going through to get into the real estate. Tip number five: location and demographics. Unlike share trading, where companies, the CEOs, and the shareholders have more control, um, I mean, unlike like other companies where you don't know what's going to happen, the CEO may resign tomorrow and you may lose money on the shares, or the company may go bankrupt. Whereas comparing that to real estate, it is not like that, because if the company has performed well in the 5 years, there is no guarantee that the company will perform the same in the next 5 years. Obviously, the companies do follow the trends, but comparing that to real estate, if there is a suburb in Melbourne or Perth or Sydney which has done well for the past 5 to 10 years, it has to do well in the next 5 to 10 years. I mean, take an example of any capital city. The people do not change, the demographics do not change. If you take an example of Perth, Applecross, you're not going to assume that in the next 5 to 10 years, more criminals will be living there. Of course, this is one of the most expensive suburb in Perth, and the same goes with Melbourne or Sydney. So with when it comes to real estate investing, you need to do a lot of research on the suburb. You need to know how the suburb is done in the past 5 to 10 years, and what is the demographics, what is an average income per household, how much discretionary income people have, how much disposable income people have. So you need to do all that research before you decide where to invest in real estate. Tip number six: negative gearing. So when it comes to property, negative gearing is the smartest strategy you can ever use to minimize your taxes. The way negative gearing works is very simple. Um, let's assume your rental income is around $20,000 a year, and your rental expenses are $30,000, including interest cost, um, including council rates, including all the other expenses. So if that's the case, you've created a negative gearing of around $10,000. Now, by according to the tax laws, you can offset that negative gearing against your full-time job. So let's assume you're working as a nurse and you're earning $70,000 a year, and you have one investment property, creating a negative gearing of $10,000. So what that means is your taxable income will drop down from $70,000 to $60,000, and you only have to pay taxes on $60,000, which will be a lot more lesser than $70,000. So I have clients where they have up to 7 to 8 properties. They're earning up to $100,000 a year, and guess how much taxes they pay? They pay zero taxes. Right, so definitely a very smart strategy if you're looking to save money on taxes. Tip number seven: invest for long term. So property is not actually 6 to 12 months game. It can go up to 5 to 10 years. and you do have to take a very long-term perspective. Property market, real estate is very predictable, very boring, but I think it is not something where you can just be quickly rich. So as long as you've got long-term perspective, it will definitely help. So I hope you've enjoyed this video. Thanks a lot for watching, and stay in touch.